Hey, Billy and Becky Epperhart here, and well, honey, we're excited on
Oh
here
man,
on August the 12th on Wednesday night,
good to
6
be
p.m.
back.
We're glad to be back. We've been gone. We've got with us Karen from Karen Conrad Metcalf
Metcalf
from Dallas, who's with us tonight, and of course, her and Dave, her husband, filled in for us the last couple of times. Did an
did a
awesome job,
great job.
and we really appreciate that. And so we just want to welcome all of you tonight that are watching, and we appreciate you. Well, I think we have a really loyal audience, and we got people from all over the world that watch us during this time. And I know some of you'll be watching us later on video. You do that, and so we just want you to know that. But right now, Becky has a few things she's going to share with you that we have for you.
Yep, we're going to jump right into the announcements. Bill is hot and ready to go tonight. So he's got a lot of information, and I'm tired of listening. No, I'm just kidding. Anyway, we wanted to welcome you to Wealth Builders. If you would like to keep up to date with the more stuff, events, access to the blogs, and just everything that we're doing, we have that on our website. You can go to wealthbuilders.org and you can get all that information. If you subscribe today on Wealth Builders, or if you already subscribed, today they get the chapter on your money mastery book as a free download, the Triple X
Oh, the
Factor.
Triple X. All
I
right.
know that's your baby. So that's a good thing to be getting, the Triple X Factor. Also, we wanted to remind you that our Business Mastery live stream workshop is coming up at the end of this month. I can't believe it's August.
I know it's already here.
The end of the month. It's August the 28th through the 30th. And you can go online to wealthbuilders.org and you can register for that. If you register today, you can use the code BIZ, B-I-Z, 50, and that'll give you $50 off on the live stream price, which is normally $3.99, and you'll make that $3.49. So all the ladies, we love a sale, we love a coupon. So go on and use that tonight. You'll get $50 off. Mark your calendar. That's really going to be a good workshop.
Yep, it is.
We
It's
have a
on
lot of
Friday,
good speakers, a lot
Friday,
of good.
Saturday, Sunday. We have, well, you and I'll be there, of course, on the live stream, and we have Karen and Dave that'll be there. We have Chris Bernard that's going to be joining us, and so we're very excited. And this is where, the workshop is where we really kind of get down into the meat of the material and talk about the how-tos really. And so the workshops are really where we talk about what I call the more hard material. In other words, the real stuff, but it's not hard like just, I don't mean that in the sense of understanding, but it's the sense of how to really knowing the steps you need to take to be able to be successful.
And all the information, because I sit through it too, and all the information is very applicable to everyday life on some things.
Yes,
also.
It is. It is.
So it's amazing what can come up and you'll go, I heard that somewhere.
Yep.
So we just need to make sure that they know they heard it from us. Anyway, so we wanted to congratulate John, who won the Kingdom Finance USB last week. Congratulations, John. You're really going to enjoy that. So our giveaway this week, if you, like we mentioned, if you subscribe or you already have subscribed, it'll be the, what is it? Oh, the Business Mastery Workshop USB. That will be worth it. It's not the current one. It's one we've done in the past, but it's all the same information, and you'll love getting that.
Well, that's a free giveaway.
It's a free giveaway.
That's awesome.
I know.
Right.
That'll be good to have in your library. So also, we wanted you to know that to interact with us tonight, we were just talking about this earlier. We love your questions.
Yep.
We love for you to comment. We would like to hear some good reports too. Have you learned something that you could share? We would love to hear all of that kind of stuff. All of that just will triggers your little brain to just go off like fireworks. So go to Zoom on the live chat, or you can leave your comments in the Facebook page. So go to either one of those and please comment. We'd love to hear that. Also, the last thing I like to say, this is close to my heart. If you would like to give or donate, we have partners.
Yep.
And I was somewhere today that I was listening to the people talk about their partners, and I thought, we could pass that up We got better partners than that. Let's play a game. My partner against your partner. But our partners are so fabulous.
Amen.
And so I want to
They
thank
are.
each and every one of you. I know a lot of you are watching, and we appreciate that. But if you would like to be a partner, or if you would like to just go online and donate, you can go to wealthbuilders.org, find the donate button, click on it, and it'll take you through all the steps. But anyway, we just appreciate you so much.
Absolutely.
It's your turn.
You got me. And so one of the things that we want to do in this particular live stream tonight is we're going to cover just a couple of graphs up front, and then we're going to get to the topic of how to shift your business during COVID. We're going to talk about the mindset and some other things. But what I want to do is cover some graphs with you. Actually, some of you have been asking a little bit for that. So we're going to go back to March the 20th, which was the first graph that we ever showed here. And this is of the S&P 500, or the ETF that represents the S&P 500, called SPY. And you can see when the COVID hit how bad the market dropped. And then we have the next one. I think it's March the 27th, when the market started coming back up. Now remember, it was right here, right before, when the market started coming up like this, we talked about what we call a V-shaped recovery. And then we also talked about, for those of you who are watching, we talked about a U-shaped recovery in the economy. And then we, of course, talked about an L-shaped recovery. I mentioned the L-shape just in passing briefly. But as we point out to kind of see, I think we've already hit a point of going into an extended U. So if we'll go to the next slide for a second, this is May the 30th, and you can see where it just got above on May the 30th. It just got above what we call the 200-day moving average, which is really the one you know that you really want to watch. Then if we jump all the way over to August the 12th, which is right now, you can see how the 200-day moving average has definitely kind of, I would say it's flattened out, I guess is a good way to say it. But I want to point out a couple of things on this most recent graph to you. One is you can see that extended U kind of just, it's out there, it's going, it's really extended all the way across. And then I want you to know how the trading range of the stock, if you go back, for example, to where it was dropping so bad, you see those long pink lines and long blue lines over here. And then the further you get over to the right, you see the pink and blue bars, we call them bars, are getting much smaller. That means that the trading ranges are much smaller than they have been. And what that's telling you is people don't really know right now which way the market's going to go. Now, if the market does go down, which I believe it will, we may go back into more of a W-shaped type recovery where it may not drop as fast as it did over there on, I think the bottom day was March the 23rd. But I want to say to all of you that are in the market that, you know, because we have a lot of people who communicate with us, that you have your IRAs in the market, 401ks, and other types of retirement vehicles that are in the market. I just want to encourage you, make sure you talk to your financial advisor. And of course, we have Chad Franson, who helps us in the Wealth Builder Investment Services. But because if you have a lot of exposure to the stock market right now, I would start, and I've been saying this now for, I don't know how many months that I've been coming on, I would kind of bring that back. You can see it kind of flattening out. And so I believe that the market is overheated. Now, I was going to show you some other slides later, and I decided not to do it tonight, but I'm going to give you a couple other graphs. But I do want to say this, that when you compare, and the best way I know how to explain this, when you compare the gross domestic product of, let's say, the U.S. right now, which is, of course, the gross domestic product means that's what the U.S. produces in products and goods. And you look at what that is, for example, right now, what that amount is, and it's actually edged up to about, the stock market has edged up to about 110% of what we call the gross domestic product. And the reason that matters is when you're looking at a healthy stock market compared to gross domestic product, you want to be at about 70%. And right now the stock market is so heated, it's at about 110%. So if you go back to the .com bubble, if you go back to where we were even in the Great Recession, and you compare those numbers, we're in the exact same territory as far as the valuation of the gross domestic product compared to how stocks are being valued right now. So I'm flashing a yellow light, and maybe for some of you, I could be flashing a red light, because I'm definitely not flashing a green light when it comes to the market itself. And I was going to actually teach some of this tonight, but I wanted to stay with the business approach. But one of the things that I just think, for those of you that want to be more aggressive, I mentioned this in passing in one of them, there's some ETFs, exchange traded funds. I wouldn't put a lot of money in this, but you can shark the market that way. It makes it pretty simple. Your exposure's there though if the market doesn't go down.
But you got to know what you're doing, right? You're going to short the market and play that game?
Well, to buy a short ETF is not the same as buying calls and puts, so it's not the same. So basically, I just want to encourage you to watch out, and I'm giving you a strong yellow light here. And because I've actually got calls and things, or people communicating with me where some of them are jumping head over heels in the market, and you just can't do that right now. So anyway, I'm sharing that with you so to let you know. And then we have others who've reached out with us, even in the coaching program we have, that have a lot of exposure right now in the market itself. And so I'm telling you need to dial that back and have less exposure. So now let's look at real estate quickly to do that. And and we're going to pull it'll be the next, there we go. This is from Redfin, which of course, many of you are familiar with the Redfin website, but they're showing that homes are selling unseasonably fast right now. The 4-week rolling average of the share of homes sold within 2 weeks of the listing. So you can see that 2020 on this graph is the red line. And you can see that we dipped down there, of course. And if you look back, that probably was late April when everybody was just realizing this COVID thing, it might be here. And now they've figured out how to deal with COVID, and you can see how it's gone up. Now, what's interesting about this graph is that the sales have gone up. If you're selling right now would be a good time to sell. But if you're buying for investment property, like I told you, I'd hold off. 2019, and you can see 2018. 2018 is the gray line. 2019, of course, is that kind of bluish teal line there. And you can see that 18 and 19 pretty much ran together, right? And so they're definitely real estate at this point. And I think it's there's a couple of things that are contributing. One, of course, is the stimulus package. And then the other thing that's contributing right now, I think, is that people are coming out of that whole COVID, but meaning they're getting out of the house a little bit because they're looking at real estate. But because interest rates are so low, that this is really having an impact of people getting out and saying, hey, I'm going to get some of that cheap money. So that's happening. Now, the next slide, I have 4 of these, 3 more, and we just did that one. Then home sale prices climbed steadily upward. So you can see 2018 and 19, you can see how that they kind of leveled out. You see that? And that's even with cheap money. So right now you can see that even home prices, including with the stock market, they're heating up as well. So that's why I've said, and I may be saying this, I'm not sure how much longer, but right now they're pretty hot. We
had our neighbor in the cul-de-sac up, cul-de-sac up, the house sold in 4 days.
In 4 days.
4 days.
Yeah, incredible.
We didn't even have time to find out about it.
No, we didn't. It was gone. The next slide, of course, is going to show us pending sales still showing strong gains. And so again, these are sales that are pending, right? But you can see how much it's gone up. Now, some of this, I'll tell you, I think some of it, not all of it, But we've talked about interest rates. We've talked about stimulus money. Some of this, I do think, is people moving out of the urban areas and more into the suburban areas and some of those kind of things. I think there is some of that kind of movement that's happening to get away from just being in such close quarters. And people, I think, right now are looking for more room. So that shows you that. And then the last slide that we have that I'll show you quickly is the pending, well, that's pending sales still growing strong. Was that the last? Yep. Okay, sorry. So I might have put two of them in there at the same time. But anyway, you can see, I think that's right. No, that is different. So August the 2nd there. So anyway, the point is it's still, the market's hot. So that's what we want to show you. So a lot of you who are in our investor program, as well as those of you that are just watching and asking, you know, one of the things I've said when it comes to real estate is you got to be careful right now when you're looking at graphs like that, not to overpay. And, you know, if it's your personal home and you really got something you want to do, and you need to move or something, I understand that. But right now for investors, for those who own property right now, of course, it's a great time to hold. But if you want, if you've got some properties you want to unload right now, and they would meet the target audience in an area you're in, of who's looking, kind of that median audience, or even if you've got some higher end property right now, it's a good time to put it out there. Money's cheap. Nobody seems to be feeling the economic effects directly of the COVID, meaning on a personal level. I know there are many that are unemployed. I had that rate a while ago where I saw there was, I read a number a while ago where we're still around 32 million in unemployment that are actually receiving unemployment. So that's the highest it's ever been. So that's anyway, those are just some, it's kind of a very unusual time. I made the comment to Becky, we're kind of in a weird season right now.
We're definitely in a weird season.
Now, if we can shift quickly, we'll shift over to talking about business. We talked about the stock market. We talked about real estate. And so we've been talking, Karen and I and Becky have been talking about shifting in the different COVID things. But tonight, I'm going to give you a little bit of stuff that's a little different than at least what I've shared. One of the illustrations I'm going to use, I've used it. I don't know that I've used it here on the live stream. But one of the things I want to talk to you about, but whether you're a real estate investor or you're a business owner, you have a business, or you're doing some other things that we could talk about, is that the mindset, whenever you're dealing with something like this, I want to put this in, is I want to say this about how do you shift your business during COVID, is you have to learn to learn. When we talk about how to shift your business during COVID, one of the first things I want to talk about is learn to learn. And you can see I put it on the slide. In 1906, Ford produced 8,729 cars. 10 years later, it produced almost 750,000 cars, which was an 84-fold increase. So the business increased in 10 years, 84-fold. So can you imagine the enterprise capacity that had to be added, the personnel, the employees, all of the systems, the manufacturing systems that had to be put in place? And so as Ford was the head of this, of course, he obviously was a learner, and many of his executives were. Then I use Amazon. In 1996, Amazon received a few hundred orders for books each day. Today, it receives more than 2 billion orders each day for same day or next day delivery.
You're kidding me. 2
billion books. And so when we talk about learn to learn, that's that thing that we've been talking about when we come on about, you literally have to be willing to make adjustments as things come to you. Now here, we're seeing that being more from a proactive perspective, but man, you have got to be able to make those adjustments. In 1987, Starbucks only had 6 stores in Seattle. Today, Starbucks operates more than 30,000 stores worldwide. So I'm going to give you a couple of things here. If you're taking notes or you have something to write down, let me just read a couple of these to you under learn to learn. The first one is you have to learn to embrace experimentation. And what I mean by that is you have to try. And if you fail, you fail, which we're going to talk about, honey. But you have to embrace it. And one man said it this way, and I really like this quote. He said, and it's not the next slide, Derek. So we're going to come back to that one. Yeah, just keep it here for a second. He said this: when a problem reaches a certain level of complexity, and I like this, formal theory won't get nearly as far as an incredibly rapid process of trial and error. In other words, you just have to get out there and do it and start trying things. Right, watch this now. And instead of saying something doesn't work, what you have to say is, what do I have to do to make it work? In other words, how do I need to adjust? What is it? And I'm going to give you another one here a little later that's going to be on the other side of that in this way, that it shows you how you can get more involved to actually change the situation so it does work. And so we're going to talk about that. But some of you today, right now, during COVID, you've got to embrace experimentation. You got to be willing to get out there and try. And then the next one, I'm going to talk about this twice tonight.
And this is a hard one.
This is the hard one. You've got to be ready. Watch this now. You got to be ready to fail. In other words, when you try something, there's going to be some things that don't work. Right? So we talk about noble failure. We talk about failing forward. But one of the things, and I gave you a stat here, there was only a handful of more than 200 companies, and these were automobile companies, that in the late 19th century and early 20th centuries that survived beyond 1920. Now think about this. There was over 200 different automobile companies in existence at, so let's just say around 1900, right? And then when we get to 1920, there's only just about 6 or so that are actually left. There's just a few that actually survive.
And they're still around.
And they're still around. Many of those are some of the biggest companies we have now. The point is that some of these companies failed, but one of the things that I think is good is that in this example separates what we would call people that are successful scalers, the ability to grow your business or the ability to change your business and to scale it up. So just only a handful. So the point is that you embrace failure to learn to learn from it, excuse me. That's what helps you in the area of embracing experimentation. And this is a big one, and I'm slow to the gate on this one myself. And so I confess my sin. And
y'all heard him.
But sometimes you have to learn faster than your rivals. Now, I'm not saying I view someone as my rival, but there are people right now that are doing really good, having adjusted to COVID, let's say, in the online world. And it's been phenomenal to see the results. In fact, just so we're clear here, there's been some businesses that have literally exploded in growth during COVID. Now, there's many examples of that. Some of them, of course, are the obvious big names, right? I just used Amazon as an example from 1996. But there's others besides the big, what we call the big tech companies that are, Facebook, right? And we go through the list. Google, we go through the list, but instead of doing that, there's many other companies that have benefited, and some are small businesses, very small. Some of them are ministries. There are some ministries that have really benefited during this time. So I want to put a quote here, give you a quote on learn faster than your rivals. And this guy, who was the head of Shell Oil, he said the ability to learn faster than your competitors may be the only sustainable advantage. And I want you to hear that. It may be the only sustainable advantage. So there have been many that have adjusted during this COVID time, and many of them are going to come out of that with a sustainable advantage. Now, listen, I know there are those of you even tonight watching me, whether you're in real estate, whether you have a business that maybe you and your spouse run, or maybe you have a larger business. You may have several hundred employees. The truth of the matter is that you have to learn to be, I call it, have some business dexterity. And the reason I encourage you with that is take this time, because we're talking about learn to learn. So take this time, sometimes we talk about knowledge, understanding, and wisdom. Now what I'm talking about is having an attitude that I'm going to take the challenges that I'm facing, I'm going to learn from.
Well, one of the things you like to say, is bought experience.
Yeah.
You put in a lot of time, a lot of money, and a lot of people they fall away after that. But if you could look at it that you've invested even in that, even in the failed experience, you have to learn something out of it. And if you come out with that, I can believe that could give you one up from the rival.
Absolutely. Now, Derek, I did this on purpose. Let's go back to that learn to learn slide for a second. Thank you. And the one at the top, because I wanted to get these others in first, I put them in wrong. That was my fault. But you have to view learning as a journey. And the reason I say that is because you're not going to get up one day and figure out something. And then, like I got up last night and remember I was studying and doing some stuff last night. Several times. And this morning I came to you and actually told you I had a breakthrough. I discovered something that this is a true story. I've been working on it for almost 15 years. And I came to
mulling it over, letting it go around and around.
And I honestly think I know exactly the step to take now. And this one thing, so you have to view it as a journey. And then the next one is let experience be your teacher.
Right.
And so the reason that I share that is that when you get out there and you embrace that experimentation, that's the things that you learn from. Now, this next one, some of you aren't going to like, and I know that ahead of time. But I put it in here on purpose because I think it's something that we need to address and it needs to be said, is learn to sell. And now I never have, truthfully, liked to be a salesman. Now, Derek, we can go to the next slide. This is on learn to sell. And I put a Mark Cuban quote that he wrote in a couple of my rules for startups where he said, sales cures all. Know how your company will make money and how you will actually make sales. And I think this is one of the things, because I've mentioned this one quote that I'm going to give you here just a little bit later in the next point. But I want to say this here, that you have to learn how. So let's say during COVID, for example, in an area maybe that you're in or the kind of business you've had, sales have dried up. Then what I want to encourage you to do, and I know, guys, listen, I know some of you out there have been hurting, and I know there's been great challenges, and so I don't want to make light of that in any way, but what I do want to encourage you to do, and the reason I put this in here, this learn to sell, the reason I put that in here is because find a way. I remember Robert Shooter saying many years ago, when a mountain's in front of you, right? Kenneth Hagin would say, you speak to the mountain, Mark 11:23, and it'll go. I remember Shooter saying, well, if the mountain's in front of you, either tunnel through it, right?
Yep.
You go around it, or you climb over it.
But figure it out.
I like what Brother Hagin said. You just speak to it and it goes. And so, but the point is, you've got to have that. That's what Jesus said, actually, Mark 11:23. So the reason that I emphasize that is that I think that in this time, sometimes of COVID, the very last thing you want to do is try to sell or experiment but right now, for some of you in the area of survival, you've got to take that kind of mentality that, okay, what do I want? And this next point is going to kind of hopefully help you. I'll broaden it a little bit and help you understand it maybe in a broader light. And that is learn to focus. And this, in my mind, these two kind of go together, at least the way I put it together. And I put in here the rule of one. So there's kind of this rule in business called the rule of one. And it means there's one problem, one product, one customer. One problem, one product, one customer. And so then this quote that I put down here on this one is your product has to be based on demand, not just your own desires. So when we're talking about dealing and shifting in this COVID thing, the one thing I want to encourage you, especially for you, those you that are really being challenged right now, whatever your business may be, think in terms of this. Instead of thinking in terms of 100 different customers in the sense of our 1,000 different customers and all their needs and desires, learn to find that one problem, find that one thing, that one customer, learn to address that one product, one problem, and then one customer. So you think in that term, and it causes you to focus. And most of the time, honey, whether we're starting ministry or whether we're starting business, we're doing something that may be a touchstone to us. Mm-hmm. In other words, it might even be something we're passionate about. Mm-hmm. But it can be something that's passionate about, but possibly other people aren't, or you're going to have to work hard at finding people that are. In other words, you're going to have to go there and find where that particular customer is. And so the reason that we talk about learn to focus is that don't focus just on the big picture of what's not working. Begin to kind of drill down and find the one thing that is going to work. So your product has to be based on demand, not just on what your desires are. And then the last one, and I'm not going to spend a ton of time here because we're about out of time, but I got a ton of information. Learn how to match your business to the current challenge. And so we talked about failure, right?
We did.
We talked about experimentation. But when we talk about failing, or the key to failing is turning every failure into a learning experience.
Yes.
And you have to learn from that. And so when we talk about experimentation, so when you turn failures into learning and experiences, I promise you, you will eventually succeed. If you'll turn them into learn from the failure, stay in the game and learn. And then I'm going to land the plane here tonight with this one. One of the things I think when we talk about learn how to match your business to current challenge is you've got to be able to embrace failure to succeed, learn from your failure, as we talked about, and apply it and from an experiential standpoint so you move forward and succeed. But then the last one is mentors. And I believe that when you learn how to match your business, sometimes you just need people who are a sounding board or someone who's not down in the middle of where you are right now to help you along.
What is it you call it? The 30,000
foot view.
Have somebody that can bring you up, put you in that airplane, get you above the clouds, and then look down on the business, because sometimes we're caught up in the minutia of everything. And it's so overwhelming that you can't see yourself outside of the room you're in. Well,
and when we're like that, usually the last thing we want to be is mentored.
Yep.
Right. And so we don't want to necessarily hear from somebody else. So I just want to encourage you in this time of COVID. Becky and I are going to pray for you again. But I want to encourage you that after mentors, I have listed here on my sheet the education, where we actually talk about knowledge, understanding, and wisdom. And so so let me read this to you. Successful business owners are obsessed with staying competent, competitive, and relevant. Mm-hmm. Let me read it to you one more time. Successful business owners are obsessed, I wrote this out, with staying competitive or competent, competitive, and relevant. So we're going to stop there for a minute. I hope this has helped you. I hope, even as much as helped you, I hope it's encouraged you. And so sometimes I don't know when I'm on this side of talking.
Well, I just wanted to say, I wanted to encourage you too. I know a lot of people are going through a lot of things. And one of the things that happen during, especially in a time like this, is that we withdraw and we think we're on an island by ourselves, and no one else has gone through this. And I know you've heard that before, but sometimes we don't actually say it, but we feel it.
Right.
I want you to know that we're here. If you need somebody to stand with you and to pray with you, you're not alone. No one is ever alone. So I'm giving you an opportunity that Bill and I would love to stand in prayer with you.
Amen.
We love to pray. And I know it's a time that, it's not over. The end is not in sight. And I know that God can rebuild, and he also can take you to a new level. And that may be both things that are happening right now.
Yeah, absolutely. And people go through these kind of times in different ways. Different things. And so, I say that because don't be condemned or or feel bad if maybe today, or this week or this month, it's been difficult, challenging. Many people are going through that. We're here to pray for you. We're here to help you, but we're also here to guide you and instruct you, because you can come out of this kind of thing with the blessings of God all over you. Especially,
you may not come out with what you went in with,
yeah,
but you can come out better, and you can come out with stronger.
Absolutely. And so tonight we're gonna kind of pause here and give you an opportunity to be able to ask some questions. And so we're gonna pitch it over to
Miss Karen.
Miss Karen, let her catch the ball there.
Billy and Becky, that was awesome. I just want to let you know that Tanera Garvin is on, and she says, thank you so much, Billy and Becky, for investing in us.
All right.
She
Thanks,
is one of
Tanera.
our girls, and she is just soaring.
Yeah, she really is.
Hey, congratulations. She's Dean of Education now here at Charis Bible College.
I'm telling you, she's just soaring. It's
amazing.
Fun to watch her.
Oh, Taneri, congratulations. Hey, there was so much in what you said tonight. I was just trying to keep track of things. One of them that caught my attention so much, I was literally just reading an article on self-made millionaires, because it was saying that 88% of the people that are millionaires are self-made, meaning that they weren't born into wealth.
Right.
And there were 4 traits that they shared. And you know that one of them is they get a mentor.
Yeah,
right.
Yeah. And that, you know what, Karen, and really that's in all seriousness, that's the shortcut. People talk about shortcut. What's the shortcut? Well, if you have somebody that's willing to teach you and train you and be able to really speak to you. And I'll just say this about that. We're real. And I always say, I like this. Mentoring or discipleship in business, it can't take place in a vacuum.
No.
It has to take place in the real world. So a way to even take that a step further is that it's very difficult to even take place in a classroom. Mm-hmm. Now, if anybody believes in teaching in the real world, we do. I mean, we believe that because that's what we do at WealthBuilders. But however, it's when you're really in the game, you get in the game, you're in the game in that coaching or whatever it is that happens. And of course, we want to do some of that for you right here live to help you and to bless you, as we go through it. But mentoring, the most powerful mentoring is honestly, it's when you're going through a hard time, because you're probably
solved over a cup of coffee. Yeah. Just being able to talk.
Oh yeah, yeah.
And share
and get another perspective,
yeah.
And then give you some how-tos. So anyway, it's a big deal.
That is so great. And I think that people just want to really let you know they're out there tonight. I've got another note here to share with you, and it's Charlie and Jill LeBlanc.
Hey, Charlie
from
Jill.
Florida.
Yes. And they said, yes, thank you so much for all of this. Amazing teachers.
Awesome.
Isn't that
Thank
great?
you, Charlie and Jill. We appreciate you.
Aww. Oh my goodness. Okay, one more. Can you handle one more, Billy and Becky?
I can handle one more. Here we go.
This is Jeff Summers. He says, thanks for all you are doing.
We haven't heard from you in a while.
I was just talking about Jeff.
We were talking about him
yesterday.
Yeah.
I talked about Jeff yesterday because he's the one. I want to say, Jeff, I don't remember the years now. I apologize, but it had to be at least 4 years ago. Could have been 5 years ago. He gave one of the greatest, best tips we've ever had in a real estate workshop, because Jeff's a real estate investor, in Dallas. And hey, Donna, I don't know if Donna's watching, but God bless you, Donna. But the reason I'm bringing it up, he's the one that told us about Google Voice and how people can, you can get a different phone number. They can leave the message. Now that may, for some of you, go, well, that's common knowledge. Well, that was about 5 years ago. And a lot of technology was coming on, and Jeff's done a phenomenal job. So great to hear from him.
Yeah, and he said that he's taken everything that you've learned, or that he learned from you, and he's mentoring 3 people.
Oh,
really?
Right.
Awesome.
So, yeah, it's just going. So anyway, we appreciate you two so much, and it's just great to see these messages.
Awesome. Thank you, guys.
Right. We do have some really good questions tonight. So the first one is coming in from Jenny Lee. And Jenny says this: since we are in an asset bubble and with government stimulus money, many commentaries are saying the stock market will keep going up at least until after the presidential election. If this is so, would it make sense to stay in the stock market and buy ETFs that track the S&P 500 or NASDAQ?
Well, I think, since you have the technical question, my answer to that would be if you're comfortable putting what's called a trailing stop loss on that particular buy, then I think that's fine. And so the way I'm assuming, Jenny, because the way you asked that question, if you want to play, now there's other ways to play the upside here, but I'm just going to address what she asked. So if you buy the S&P 500, for example, you buy SPY or you buy the NASDAQ or whatever, then what you want to do is put your stop loss. It depends on what your risk is. But if I was playing that game, I would probably put it at about 8%. And then I would keep that 8% as a trailing stop. So the market goes up and it comes back down, it'll stop me out. One reason you use around 8% is because you can get that kind of fluctuation in a day. And so you can, if you put what's called a stop loss, if you put a tighter stop loss on there, then believe me, the big money will shake you out quick. And so I think what has to happen, and then all of a sudden you're in and then you're out and you lost,
and you don't
4%.
have time to get back in.
Yeah. So you put one, but at the same time, Jenny, I'm going to just tell you, I don't know that we've ever talked. I don't think we have, but you just really need to, have somebody that can help you. And even if you want to communicate to Chad or something about that, he probably can. But if you already know what you're doing and you know how to do it, then you could play it, but make sure you have a stop loss protecting you on the backside.
Oh, that's awesome. Thank you. This is coming in from Ruth Yarborough Rock. I hope I said that right. Do you know Ruth?
Yeah, well, I know Ruth. They're graduates from 2000, I want to say 13 or 14 from the business school.
Oh, that's awesome. Okay, so Ruth has a good question, and this is going to lead into something that, Billy, we did literally drag you into kicking and screaming. She says, we try to watch Billy every chance we get, but that's not really the same as a mentor, is it? We don't know anyone locally who is where we want to be. So we had to push you on this, Billy, but maybe you and Becky can share what we've started in both real estate and in business.
So what we did, Ruth, and this happened because of folks asking us, and Karen, and actually it was the real estate coaches, Karen, Dan Dyer, and Mike Davis that really kind of twisted my arm. And so we started the real estate coaching, but then we also as well have the business coaching that we do. And so really to be able to have the time and be able to have the bandwidth to try to help people, we started offering it. So really what we'll do, for example, from the business workshop that we have, I think it's not this coming weekend,
the 28th through the 30th.
28th through the 30th of August.
Coming up. And
so we do have, Ruth, a coaching program and of course, in this day of COVID, we learned, and all of us have learned, that we can do a lot of coaching on Zoom and do one-on-one, look at your stuff. And so that is an option that I think it's really a viable option, because it gives you an opportunity to talk to kingdom coaches that understand business and at the same time understand the kingdom as well.
Yeah, that's great. And just to remind people that you can sign up, it's a live stream the weekend of August 28th through the 30th. There's like 24 sessions. Billy's going to be doing a lot of that teaching, and it's interactive. So there's community that we found too that are online. But this is going to be a power-packed business mastery workshop. We're going to be focusing on branding. We're going to help people to get the word out and really help you develop revenue streams, along with some help with cash flow and the basic profit and loss of a business. So we really encourage you to join us for that. You can register, go to wealthbuilders.org and click on the banner for the Business Mastery Workshop. And if you register, you can get $50 off. Use it, Biz50, BIZ50. And you can register for that. And I'll tell you what, it's a phenomenal weekend. And we're going to allow you to watch it for 2 weeks after the event, because we know sometimes people can't stay on that computer for 12 to 14 hours over the weekend. So just want to remind everybody about that opportunity.
Went to the real estate workshop live stream, and they said that when they knew that they had 2 weeks, what they would do was make notes. And so they would go back into the week and rewatch what they would have questions on. I thought that's genius.
Man, that's smart.
Genius.
That's great. And I want to say $349 to be able to stay at home and get the information that you're going to be able to get. That really is a steal.
It is. One of the things you were talking about tonight was about experimenting and just being really bold with that. And one of the things we're going to teach on is a method for that scientific method, where you actually lay out the steps for those experiments, and then you analyze the results and you take it back through. So it was really interesting. We didn't talk about what you're going to talk about tonight, but the things that you discussed, it's like we have a tool for that we're going to be sharing that weekend.
That's good, Karen.
Wow.
It's really exciting. Okay, we've got a question here from Stefan Eshun. I hope I said that correctly, Stefan. He says, I have saved up $30,000 in my account. I want to find out where to invest for a short term. I said short term because I want to buy a house in the next 1 to 3 years. He says, I want a situation where I can withdraw the entire when I'm ready to purchase my house. He said, thank you.
Hey, Steph, I think I know Stefan. He's in, I think he's in Michigan, but I'm not sure. He might be in Kentucky. I think that's the same difference. One. Yeah, I know it's a big difference. But hey, if it's you, hey, if it's not, hey, God bless you. But I think right now, if you're wanting to buy a house or you're wanting to take advantage of the market going down, you want those funds to be reasonably liquid. And so you also want them, Stefan, to be reasonably secure. So usually just using a money market of some sort for that. And it's possible you could do some what we call fixed income with bonds or some other things. But right now, if I understood your question correctly, if it was going to be in a year or less, I probably would put that money in a money market. And right now, you can find some money markets that I think are paying between about 2%, maybe a little higher than 2%. So now if we're going to discuss the whole investing thing, that if you're Stefan, the one I think, then you could look at some other alternatives. But I think you have good experience in real estate, so I'd keep that money fairly liquid.
All right, that's great. We've got another investment question here. This is pretty technical, but Billy, I know that you're going to totally understand what I'm asking. This is from David Amy. And David says, Billy, my name is David. I asked you about 6 to 7 weeks ago about doing a swing trade, shorting the overall market, specifically something about the SPY. You're going to know what that is. You talked about the SPY. He said, I executed this trade 2 times and I closed it for a profit. I'm shorting again now using 3 entries to establish a position, but I'm wanting to know what you think. Should I stay with the trade or close it and have it break even rather than enter in another time?
Well, the truth is that we are in uncertain times. And I think either someone said or a question came in, Karen, earlier about the election. And so I want to say this about the swing trade. So typically a swing trade. So, when you're investing, most people know what's called day trading. And day trading, honestly, unless you're incredibly gifted and talented and technical, your tactics are sharp. Day trading is it's like gambling. And so you just, it's not a good thing to do. Then we have what we call long-term investing. Long-term investing is where you just basically buy and hold like you would in real estate. You go through the different cycles, and eventually, the market, for example, if it goes down, it'll go back up. But then you have in the middle, you have what we call swing trades. And classical swing trades, most of the time, can last from a couple of days, all the way out to, it could last several months in a trade that you're trying to happen. But typically there's a day behind it. You start with a couple of days and maybe you go out to 30 or 40 days. So that could be a swing trade. Sometimes it could be 10 days. So the point of that is right now, the reason I took the time to explain that part is because right now we're sitting in August and the election is in November.
Yeah.
I don't believe that they're going to let the market go down too much before the election. And right now, just so we're clear, I haven't completely re-verified this, but there was a lot of talk about the government buying bonds, and in some cases, actual ETFs in bonds. They were getting aggressive to keep the market there. So I don't know what all's going on behind the scenes, and so I think if you did short, by the way, I want to say his name is David, right? If you did short and you came out good on the swing trade, I want to commend you for that. And I heard you when you said you took 3 different entry positions, which is a safe place to be, meaning you're instead of jumping all in at once, comparatively speaking. So I would say right now, David, I'm not sure that I think the trend will probably either stay up or maybe flatten to the election. It's possible a little later here it can trend down. I think after the election, I think it's anybody's guess, but my opinion is I think the market is going to go back down, but it probably won't happen until the first of the year. And then if I'm wrong on that, I'm wrong. I'm just saying I think that I mentioned where we were, the gross domestic product compared to the price of the market right now, and the market is so heated that that ratio that is used, one of the classic ratios to figure out if we're in a bubble, that ratio says we are.
Great. Thank you. I have a question. This is actually from me. Is that okay?
Sure.
But one of the trends that I'm seeing out there is with COVID, organizations and ministries, companies, they're kind of seeing what's happening with COVID and they're entirely shifting their revenue streams to accompany the current state with COVID. And they're leaving behind some of the things that actually established their business. Is this a detour that we're going to come back to those solid revenue streams in different ways? Or what advice would you give to people that had to make a shift, but they've done it all the way?
Well, I think if they've done it all the way, then it depends on whether or not that shift has any legs on it, for the long term. So, an example would be, we've used this a couple of times here, but, restaurants who never delivered. There are some restaurants I've heard about, not just here, but nationally, that have really pivoted there. And because of DoorDash and, just a whole Grubhub, a whole list of those businesses, some of those restaurants have shifted almost completely to that business. If it's got legs, I think that kind of stuff is going to stay there. However, I will say that right now, I want to commend the businesses and companies that have shifted, Karen, for the short term, and therefore they're bringing in revenue because they have experimented. Pardon me, they have changed. The other side of that is, though, you can't let go it's kind of like you dance with the one that brung you. So you can't just let go of what has been your primary revenue streams, but you do have to pivot during this time. So I think, it's a great question. Now I do think we're coming into a time here right now, we're in it, where some of this shift that's happening with some of the industries is probably going to be permanent. Now, I don't know about that with restaurants and that kind of thing, because people still want to socialize. People still want to get out and about. So that's going to come back when this is all over. But I think there might be some shifts in the travel industry and other things that are happening. Just look what we've done with the whole Zoom thing and the shift we've made. I know. It's like I've been reborn in the Zoom world I didn't even know existed. I was anti-Zoom from the very beginning.
One of the things I've noticed is how people have shifted back to customer service.
Yeah, that's a big comment.
It really is. I have
Wow.
noticed that where they have really put the customer more first
Yeah,
and value what they.
yeah, what they think or
I
say.
really have
or,
noticed that.
Yeah. Well, hey, Karen,
Hey,
I'm gonna get. She's gonna take a third of the workshop. This
I
time.
know.
I
That
think
was
so. That's really good. And some of this, like being forced to find another revenue stream is something that can just be added in that business model canvas
Absolutely.
as another revenue stream. That's awesome. Okay, this question is from a different David. We've got a lot of Davids on tonight.
Wow.
And the question is there a price per square footage we should stay within for acquiring investment single-family dwellings? Someone recommended to me $100 per square foot.
Well, David, it depends on where you are. In other words, geographically, because you're going to be in some areas where your rents are a lot stronger. So for example, you take the coastal areas. Typically, your price per square foot on the coastal areas is higher. And so, remember, David, we teach this. It's a classic rent rule, the 1% rent rule. We like to see get up to 1.5%. But a 1% rent rule, you want to at least get that in rent. So if you purchased $100,000 house, and I'm going to give you an example here in a second, but if you purchased a $100,000 house, you want $1,000 a month in rent. Now, when it comes to price per foot itself, there's some places right now in the southern part of the United States, the Midwest, there's some places, you can buy property for $70 a foot. And most of the time in those areas where you can, typically you're going to get that 1.5%, in some cases 2%. That means your rent, if you bought a $50,000 house, a 2% rent return in that example would be $1,000 a month. 1.5 would be $750 a month in rent. So that on a $50,000 house. So that 1% rule is per what you get in monthly rent. In gross rent. We're not talking positive cash flow yet. So here's what I want to say about price per foot. On price per foot, it strongly depends on where you are located. And may I say, that is even true when it comes to actually building a house from scratch, custom home or some other type of investment property you may be building, that the builders, the construction cost, unless you're the builder yourself, the construction costs will if it's not there right now, it'll slowly get and sometimes quickly get to parallel what houses are selling for. So I think up here, where we are in Denver, for example, some of those houses are $275, $300 a foot. You go in the mountains behind me to the ski areas, some of those properties are $600 a foot. There's even some that go as high as $1,000 a foot. So I think you can't just go by one place. But down in some of the what I call the Bible Belt states and the Midwest states, you can get well below $100 a foot, depending on the condition of the house and other things.
All right, that's great. We've got time for one more question here, and this is another question coming in from Jenny Lee. She says, someone told me about being a short-term lender for a bridge loan that generates 7% interest. Are these loans generally safe, and what should one look out for in considering borrowing money to somebody in a bridge loan situation?
Well, you mean, are you going to loan money? So she's
Yes.
talking about loaning money.
Yes.
And the answer would be, if it has to do with real estate, then you can get, if it's a bridge loan, then you can get security against the real estate. But if you're just doing a loan and it's, kind of what I would call a one-off deal, you don't have a bigger group standing behind it or whatever, and it's an individual loan, then you have to be careful, Jenny. If those loans they need my advice would be, not understanding exactly what you're talking about, that you have at least some level of security, or if you don't have direct security, the company or the people doing it have a strong track record, and et cetera. So that's the kind of thing that you just need to make sure you look out for.
That's really good. One other thing that I used to do bridge loans, quite a bit of them, and we would always look for the end loan approval or like the takeout? Like what's a worst case situation and what can we do to mitigate that risk? So she'd want to look at that too.
Well, and that's the issue, is that with the takeout, if they already have a takeout, the problem can be that if they're not solid, the takeout can go away. And so that's the reason you want to see a track record, because I've had people come in on business deals and say, hey, I've got this particular investor, and they're going to take everybody out, and say the takeout's going to be in 90 days. Man, you can make a lot of money in 90 days. You get to, get down there to day 80, and the person that was taking them out is no longer there. So I think in real estate, the banks want to lend on that, and so they need, sometimes we call it mezzanine financing, bridge loans. In other words, they need an extra bump in cash to be able to complete the project so they can get the takeout. So if they got a good track record, then usually that's money well invested.
That's awesome. Okay, well, Billy and Becky, we are out of time. This has been awesome, so I'm going to send it back to you to close this out. Okay,
we want to pray tonight before we go and pray for you. We really appreciate you coming on the live stream, and we appreciate all your questions, and we feel it. We feel the support. And so tonight we want to pray for you before we go. And so let's just believe God. We're going to speak blessing and increase over you. So Father, tonight we thank you. We speak blessing and increase over those that are watching. We say tonight that they have a spirit of wisdom over their life, about what steps to take, about what things they need to do. And as we speak that blessing and increase, we say tonight that they're surrounded with favor as a shield in their life. And we declare that over them in Jesus' name. Amen.
Amen.
God bless you.
Bye-bye.
And we'll see you soon right back
Next
here.
week.
Next week, right back here. Bye-bye.